Welcome back to the channel. A lot to unpack, a lot to talk about this week, especially if you're in the market for a mortgage, whether you're approaching mortgage renewal, you're looking to shop around, you want to basically do something in the next little while. I'm going to talk a little bit about a promotional offer that we have right now on the table. And more importantly, obviously, with those CPI numbers coming in, what are our forecasts for the Bank of Canada? I mean, looking forward to the Bank of Canada's next meeting on the 17th. Ultimately, right now, are we going to hold our breath to see a Bank of Canada cut, or is it going to be another pause? And ultimately, what is the data telling us? Also want to recap about some of the things that we're experiencing right now in the mortgage marketplace. So stay tuned for that. Once again, thanks for stopping by. If you have not yet subscribed to the channel, please consider subscribing, hit that subscribe button, hit that notification bell. Trust me, you want to stay up to date with everything that's happening, especially when we get these types of promos that I'm going to talk about in just a moment. More importantly, also want to hear from you in the comment section below. Leave a comment, thought, concern down there. Like and share the video. Let's get right into it. Now, before we get into this promotional stuff, I want to really just do a quick recap. Earlier this week, we got that CPI data, the Consumer Pricing Index. Stats Canada released, inflation, headline inflation down to 1.7, but the true data is the core medium term numbers are still a little bit sticky. So at the onset, a lot of data, a lot of news, a lot of headlines saying, hey, maybe the Bank of Canada is going to cut, maybe they're not. At the end of the day, I don't think the Bank of Canada will be cutting in September unless we get some other data that comes between now and then that's really negative. Once again, inflation is still a little bit sticky. Yes, it's below the 2% mark. Yes, there could be a possibility the Bank of Canada could cut. I think we're going to wait to see what happens in the US if they end up cutting, how that conversation continues to evolve. Obviously, a lot of dependency on what's happening with these tariffs, especially these reciprocal tariffs. If Canada continues to impose those reciprocal tariffs and to what extent, that's obviously going to play into the inflation saga here in Canada. And remember, if inflation continues to be sticky, the Bank of Canada may not need to cut rates, or they don't have the cover to cut rates. I do believe, though, keeping in mind that the Bank of Canada potentially will be cutting at some point in the remaining portion of 2025, whether it's a quarter or 0.5% is yet to be determined. Super important to understand is that if you're planning on this, and this ties into the promotional rate that we're talking about, ultimately right now, what I would suggest is, if you're looking between the variable and a fixed, and we've talked about it at great length on the channel, understanding your appetite for risk. Taking on variable rate mortgage requires a little bit more due diligence on the consumers and on the mortgage holders, and to keep track of what's happening, right? At the end of the day, the idea with the variable rate mortgage is you take it, hopefully they reduce those rates. You wait until a better time to lock in that rate, because you can lock in from a variable into a fixed and basically have it at a cheaper rate. Now, ultimately right now, what we're seeing is obviously the bond markets are still relatively high. That 5-year Bank of Canada bond is still relatively ticking close to 3%. Some of the banks, and we'll get into it now, are starting to do some very quick promotional stuff, lasting a very short opportunity right now. So basically, as long as it's closing before, I think it's October, we're basically the end of September is when that promotional ends, that program ends, is ultimately you can get about 3.94 to 3.89 for a 3-year fixed product, especially if you're looking to refinance, restructure your mortgage. And ultimately, there are a lot of conditions that apply with this particular product. If you're buying a home and it's an insured product, if you're buying and it's less than 20% down, you can get a rate that's as low as 3.64, 3.59, depending, for 3 years insured. Obviously, this is for purchases only. Maybe some insured particular products may be applicable, but once again, as this data continues to roll out, a lot of our clients who are already with these particular lenders are getting these promotional offers. We've switched them over, those who are maybe with another bank. Now, keeping in mind, once again, as I said, you want to keep yourself informed with that. So if you have questions about this particular program, feel free to send us an email. Our information contact, all the details are in the description box below. Super, super important. As I said, the low 3.59 to 3.64% product, depending obviously on the size of the mortgage and other parameters, is for purchases, for insured purchases only. There are conditions that apply if you're looking to refinance. You're starting anywhere from 3.99, 3.94, potentially even 3.89. I mean, these are obviously very short times and you have to close within a specific window. Conditions apply, always the case, right? At the end of the day, and I think that is probably still one of the cheapest products on the internet right now. Once again, if you know someone that would be interested that is looking to refinance or restructure their mortgage, obviously have them reach out to us, share this video with a friend. Last and foremost, I mean, ultimately right now with all this talk about refinances, you might be saying, hey, well, my mortgage doesn't renew until like the next little while. And, you know, I don't want to get out of my mortgage now because maybe my interest rate's a little bit lower and we don't know where interest rates are going to be. So what we've done is sort of for a couple of our clients that have reached out to us where their renewals are coming up in the new year, we sort of ran a diagnostics on the deal and said, look, if you pay the penalty right now, find out what that penalty is. You know, this was a particular scenario. We used a $450,000 mortgage. Client was going to be paying, you know, about $4 to $5 grand in penalties, and ultimately from their rate that they had locked into at 5.5%, you know, around 5%, the actual savings was significant. If they were to break the mortgage, absorb the penalty, even with their current mortgage right now, there would be some substantial savings left on the table. Now, ultimately, each case is different. The client was also going to be paying out some debts, so there was an overall bigger balance, and the savings were more immense because of that. But we do encourage you, if you do have questions, in the description box below, as you're looking for that data, you can get a link. There is a link to our app, our online app. It is free once again, and you can go play around with some of those tools using the current rates right now, and obviously figuring out if it makes sense to refinance, pay the penalty, and get out. Once again, said this is something you need to consider. We don't know where interest rates are going. Many project that fixed rate mortgages could be coming down, variable rate mortgages could be coming down. Just keep in mind and remember one thing. If the Bank of Canada does lower their policy rate, it doesn't necessarily mean that fixed rate mortgages will move lock and step with those particular products. There could be a scenario where fixed rate mortgages remain elevated, or they remain at this point and variable rates continue to drop, or vice versa. We'll actually see fixed rate mortgages being way more attractive than taking on a variable. And at that point, you have to make that cost benefit analysis if that is right for you to get out of that mortgage now. Understanding your overall picture. If you have questions or concerns, always reach out to our team here at InTouch Mortgage Solutions. We're here to help guide you through the process. It's a no obligation conversation. You know, maybe we can share some information with you that you didn't think about that could save and keep thousands of dollars in your pocket. Once again, thanks again for stopping by. Let us know what you think the Bank of Canada is going to be doing next month on September 17th. Will they cut? Will we see an additional 0.5%, 0.25% by the end of the year? Let me know in the comment section below. Want to hear from you. But until next week, thanks a lot. Make sure to subscribe, and we'll see you all next week.